Lots going on this morning. February 29th, we will talk about inflation, PCE. We will talk about pending home sales, which just came out at 7 a.m., so I've only got the highlights. We'll talk about the top 1%. We'll look at what happened to Salesforce.com and Snowflake. Folks, let's jump into it. Let's get into inflation. As always, there are 3 monthly inflation readings. Typically, it kicks off with CPI, Consumer Price Index, followed by PPI, Producer Price Index. And then a week or two later, we get the most important inflation reading of the month. And that, of course, is PCE, Personal Consumption Expenditure, more specifically, PCE Core. Why is it the most important? Well, frankly, the Fed told us it was the most important. So we believe them. What happened? We will talk about PCE Core. We will talk about what happened last month. We will talk about expectations, and then we will talk about what actually happened. I believe it is important to do this so we can see trends and we can see surprises. So first, let's talk with the year-on-year numbers. Last month, PCE Core came in at 2.9. It was expected to come in at 2.8. There was a lot of thought about it surprising to the high side because if you don't recall, both CPI and PPI surprised high. So there was some fear in the market that PCE Core would exceed 2.8, but it did not. It came in actual 2.8. So what do we have? We have a continuing trend downward, right? PCE Core last month was 2.9. And we are still on a trajectory lower. It may not feel that way, but again, that is just what the numbers say. Now for the all-important month-on-month. Again, last month was 0.2. The estimate was 0.4, and the actual was again 0.4. So the economists, the experts got it right this month across the board. All metrics were as expected. I will say that 0.4 is concerning because, again, it kind of reverses the trend, right? We were headed lower, and we just came off a month. Last month was 0.2. This month was 0.4. As always, a single month is not a trend. So you and I will be paying very close attention to what happens in March. We are seeing commodities rise. We will see if that continues forward. Another metric that we get every Thursday that you and I have been talking about for quite a while is weekly unemployment claims. Again, last week, expectations, what happened? Last week, we came in at 202,000. Expectation was 209. Actual, 215. This month stands out, or I should say this week stands out because it actually not only is trending higher, but again, exceeded expectations. Is this the start of a great wave of unemployment claims, much to the doomers and crash bros liking? Is this just a blip as we stay continually below 225,000? I have no idea, but you and I will be talking about it every Thursday morning because it gives us the best insight into what is happening in the U.S. job markets, and we get it, I think it's 5:30 Pacific every Thursday morning. Alrighty, folks, let's talk about pending home claims. Pending home claims came out at 7 a.m. I started this broadcast at 7:02, so I only have the headlines, and the headlines are, I don't know, good or bad, depending on how you look at it. I particularly think they are good, but if you are in the business, you are going to think this number is horrible. What do I mean? Again, last expectations, actuals. Last month was revised lower to an increase of 5.7%. It was estimated that pending home sales would continue to grow, although at a smaller rate at 1.5. In reality, crashed, fell off a cliff, negative 4.9. Folks, rates matter. It may not matter at the entry level, but it certainly matters in the move up in luxury markets. We are seeing more and more people just stay put. It makes sense. Again, we are seeing active inventory build, and that is a good thing. Hopefully something is clear by now. I want the housing market to heal. Unfortunately, the only way the housing market heals, in my mind, is with time. The longer rates are above 7%, the more time we get to heal. If you need to be reminded, go back and check out January. Pending home sales down negative 0.49%. Rates matter. I want rates to stay over 7% because I want the market to heal. The only way this market heals is with higher rates. 7% clearly seems to be the number where demand pulls back. Sub 7, not so much. 6.6, clearly not good. So again, it is my hope that rates stay above 7. Shoot, if they can stay above 7 all year, we might be able to heal the housing market or take it at least a big step forward. That said, I have very little confidence that rates will stay above 7 all year. Hopefully they stay above 7 till the summer. We shall see. So again, lots going on there. Let's talk about the top 40 markets. Folks, if you're not subscribed to Resi Club, hopefully this data gets you there. So Resi Club, Lance Lambert put out a couple of tweets and data sets. The top 40 markets where inventory is growing the most, and the top 40 markets where inventory has dropped the most. Folks, if you are following this channel, hopefully you know by now it starts with active inventory. The only way you are going to see price drops is if inventory swarms, dwarfs, just envelops supply. Now at the national level, that clearly is not happening. But it could be happening in your backyard. So why don't we start with the top 5 markets where inventory has dropped the most. Now again, go check out Lance Lambert. You will get all 40. I am not going to steal his thunder with the entire 40, but I will give you the top 5. And we will start at the bottom. Number 5, Yuba City, California, with a negative 21% drop in inventory, active listings. Number 4, Bridgeport, Connecticut, with a drop of 24%. Number 3, Stockton, California, with a drop of 25%. Number 2, this one shocked me. Did it shock me? Yeah, this one shocked me. Boise City down 37%. And the number 1 market with the largest drop in active inventory year on year is Las Vegas, Nevada, with a drop of 43%. Pretty crazy, right? Now for the most important. This is like tippity top important. If you are on this list, if your city is on this list, be careful. Frankly, let me make sure I got this right. 4 of the 5 cities are in one state. I believe this one state is in trouble. This state is in trouble. I bet you can guess based on some of my past conversations. Again, we will start with number 5 and go to number 1. Again, this is the top 5 of 40. Go to Resi Club to get all 40. Amarillo, Texas. Amarillo, Texas inventory is up 61% year on year. How about Naples, Florida? Active inventory is up 62%. Newport and Sarasota, Florida, up 81%. Folks, if you are buying or selling in the top 2 markets, you need to be extra careful. Number 2, Cape Coral, Florida. Active inventory is up 103%. 103%. Not to be outdone. And a city that tells Cape Coral to hold my beer, Punta Gorda, Florida, up 149%. Folks, if you are buying or selling in Punta Gorda, Florida. Be careful. Frankly, if you're a buyer, it is time for disrespectful offers. Very, very interesting. So again, ResiClubAnalytics.com. Give it your email and you will get 5 free articles. There is a monthly service if you'd like to get the data and things of that nature. Go check it out. Something I'm big on. I believe Lennar, the home builder, might be on the cusp of setting a trend, and that trend could be a significant contributor to solving housing affordability. What is that? It appears, at least at first cut, that Lennar is building smaller homes. I would argue significantly smaller homes. On average, in 2023, did you know that the average square foot of a new home is down 3%? The average square foot size of a new home in 2023 shrank 3%. Frankly, it is my hope. I would put money on this. It would be my hope that in 2024, the average square foot size of a new home built drops 5, 6, 7%. We need to build smaller entry-level homes. It appears that Lennar is off the sidelines doing just that. It is my hope that they prove success and other builders copy. That would be significant. Let's talk about Snowflake and Salesforce.com. Folks, you can go back and listen to my review of Palo Alto Networks. I shared with you that Palo Alto Networks giving a weak guidance because they are in the cybersecurity space was a huge red flag to other software companies, and I specifically said Snowflake. I hope you listened. Snowflake did beat top and bottom, but had weak guidance, and oh, by the way, their CEO is retiring. I hope you listened because Snowflake, at least at last look, was down 20%. No joy. So again, folks, my history in software, my history in selling security software, my history in going through complex sales cycles said, if Palo Alto Network in cybersecurity is reducing guidance, watch out below for other contributors. And we were right. A couple of other things to talk about. I just got confirmation of a surprise speaker at the 2025 ORAT event. They will be speaking after lunch on day 1. I never expected to get this speaker. I will announce it later when we put tickets on sale, but I just wanted to give that tease. It is someone that hundreds of you have asked to talk to hear from. Some of you probably can already guess who that is, but yes, somebody that many of you have asked to speak to, ask questions of, has agreed to speak after lunch on day 1. That is cool. Not to be outdone, Salesforce Best Buy also was a earnings that I was looking into. They beat top line, beat bottom line, and issued weak guidance. So again, folks, the consumer is at least getting more conservative on expenses. And then lastly, folks, if you are on Twitter or X, I strongly suggest you interview or you follow a gentleman named John Wake. John Wake, he had a great post today talking about housing as inelastic supply and that prices are sticky on the downside. John Wake went into great detail talking about that. And again, if you understand what he's talking about, if you read it 2 or 3 times, you will understand why the crash bros are economic idiots, because they don't understand housing. Alrighty, folks, you have a wonderful day. Take care of yourself, smile, don't forget to do the work. And of course, today is the last day. Today is the last day to buy How to Get Started One Rental at a Time at $3.99 and get the bonus of the Vegas event. Anybody that buys the $3.99, I will add the 2-day recording, 21 podcasts, all of that, just as a thank you. Folks, you're amazing. Take care. Bye.